Hello guys, and glad to have you on board again. Today we're just going to do a quick update because we're switching into September and therefore we could eventually have a look at some long-term shops and stuff like that. But actually, to be truly honest, it's not necessarily going to worth it. So we know what context we're dealing with at the moment. This context still hasn't changed at all. We're still living with this bubble into the Nasdaq and actually just the 5 to 10 stocks, which are heavy weighting into major indices, even though there are some slight changes that have been happened recently with the stock splits and definitely the way they could eventually impact the Dow Jones, just this one, and for some specific reasons of weighting into the Dow Jones. But despite that, we're going to get into analyzing how long is it going to take for us to return back to some more normal pricing conditions in which we can eventually start to risk manage once again. Because until then, I'm sorry to say it all over again, but we're just going to have to wait. And there's still nothing to do, even though today I'm still going to talk about some areas of information in which you can look for early signals of going back to normal stuff. But until then, all we can see is just pre-signals, and all of those signals I've seen so far just fail to actually validate. These are really short-term aggressive signals leading us to believe that something might eventually get the trigger, but never does. So until then, we're still playing with that very, very stupid game in which basically people are gambling and betting on the fact that the storm will never show up. And as long as it doesn't, each and every day gets even more bullish because the momentum gets very stupid. And the more stupid it is means the day right after has to be even more stupid. And that is the world we live in right now. And even though, yes, I can't stress how totally dumb that is, that's the reality we live in. And just remember what we've said on the previous podcast. Facing these situations, you only have a binary type of choice. Either you agree with that and you want to be part of it, or you disagree with that and you're just going to have to stand still and wait for your time to come. So yeah, cannot stress that enough. And we will do this once again today as a safety procedure. Just be aware that not playing the market at the moment, if you think it's irrational, definitely is the smartest choice to do. If you're willing to follow it, once again, I totally understand. That's probably the smartest choice to do right now. I'm probably the dumb guy out here just saying, all right, I don't want to be part of it. Future will tell if I was right or wrong. But until then, I feel like I have no other choice but to let it go and patiently wait for my time to come, or doesn't. I mean, actually, not being in the market right now feels the most rational decision to make in my personal portfolio management. I'm still slightly upside exposed, but I definitely don't think this is really long-term reliable. So most of the gains I've already piled on. I think most of these will probably be erased right now. So limiting the exposition to the upside market feels like the most rational thing to do. Being net bearish right now, totally, absolutely not working. I've tried it many times to cover the portfolio, still doesn't work. Anytime I get to cover up, stop losses get taken down, we go higher, and that's basically the motive we're still into. Anyway, so today we're still going to try and have a look at all of the early signals you can eventually have a look at, not to trade, okay, but just things that might be giving you early actions of something to happen. We're definitely when the smart money gets back in the market, so we can definitely be sure that the smart guys are behind their screens and looking for opportunities, waiting for them, probably just like I do. So be smart enough to do the same thing. The goal in here, what I'm trying to teach you, is how to follow smart money. Right now, smart money is probably doing nothing or looking at sideways action and hedging propositions in the market more than just trying to either blindly follow the dumbs or trying to go against them. It's something that is probably going to be more rationally put it in between, okay? So until then, we have a look at the risk factors, and that's what we're going to be doing today. Okay, first of all, in terms of context, the news flow is, I mean, out of any rational standards. We're making 10% on some stocks for absolutely no reasons, but just people expecting that other people will buy them because they're cheaper. So let me just stress how stupid that is, like making 10% on Tesla of what? Just because stock split? That really explains a valuation to move 10%? No, it doesn't. It's just stupid. So don't try to make it rational once again. Either you agree and follow this thing, or disagree and you just don't fight it, all right? I tried it yesterday. It didn't work out. I just sold exactly the amount of Tesla shares I own basically I've been stopped in just a few hours. So it's really absolutely staggeringly stupid, but that's the world we live in. So it's no loss for me because it basically sold what I owned. So it's just a temporary out of the market section in which I was, absolutely just putting me out immediately later on. So that's really, really the world we live in. We don't know where we're going, but anytime you try to cover up the portfolio, the cover up positions just ended up taken down. So yeah, I'm still out on Tesla right now because I'm in to the upside, even though I totally disagree with whatever happens. So I'm trying to be out as much as possible, but I have no signals. I had some signals on Friday. They ended up not validating on Monday. So I'm back out and waiting to get back in to cover up the portfolio, but waiting for signals. So yeah, that's the world we live in and out, and endless patterns, feels like repeating each and every day over and over again. Anyway, so sentiment still oscillating with this fear and greed at extreme greed levels and back to just greed, and waiting for a shock in which I still tend to believe is about to come. But until then, just remember what I said earlier. I think the current market mood is that, okay, smart money thinks something ugly is showing up and that we're going to have a pullback, but until it doesn't, we're going to bet harder on the next day not to happen. So until it happens, or anything shocking the market and brings back volatility, until then, there's going to be very aggressive guys betting on the opposite direction and saying, all right, it doesn't happen today, so let's rise that shit to hell. And if it doesn't happen tomorrow as well, we're going to rise it even more. And that is the pattern we're into. So it's totally stupid. Like I said, agree, disagree, trade it, or stay aside. That's the only choice you can make. The other problem we know about is that those stocks weight a lot into the indices I generally get to trade. So I just cannot work at all right now because of these 10 stocks totally fucking up the indices valuations. You've got indices in the rest of the world doing this, and you've got US stock indices doing this just because of 10 stocks. So yeah, that's a problem. That's a problem in terms of risk perceptions and risk management. I'm totally aware of it. And once again, either you fight it or you agree with it. I disagree, though I do nothing. Okay, so we could actually move on in here and get real fast to these areas, because this is where things really happen. I'm looking at the smart money eventually hedging Dow Jones versus NASDAQ, because there is a very dangerous spread widening out there. We're dealing with a technical area, but it's still hard to say if that area will actually react. We'll have a look at the Dow Jones versus NASDAQ stocks. Until then, you can see the rest of the world is pretty much going sideways, waiting for the US to lead the market, either reaching us to some breaking resistances and stuff like that. DAX could be breaking resistance. VIX could be starting another downside leg. Euro stocks could be breaking up, Nikkei as well. Or everyone goes to the downside very rapidly, and once again, US just makes the decision right now, and just because of 10 stocks. So it feels like 10 stocks are leading the entire future of the stock market worldwide. God damn it, I've never seen such a stupid thing in my entire 10-year career. But I mean, there's a first thing for everything, and it feels like the recent years have been all about making new record-breaking stuff in every direction. So we're now in a record-breaking system in which 10 stocks are leading the entire fucking world valuations. Oh man, can't stress how stupid that is, but that's the world we live in. 10-year bonds and 30-year bonds have been making huge spread. You can definitely see that they're going totally different directions, even though 2 years to 30 years would be even more staggeringly stupid in here. So the yield curve is totally distorted. One of these two things is lying. So either the short-term yields are going to surge, or the 30-year yields are oversold. And in that perspective, I mean, I don't know which one is wrong, but I know one of them isn't. And I don't know which one. I just need to bear that in mind and have a look at this within the next few days. Either the 30-year bonds will build a higher low point and will rapidly reach out to resistances, as the 2 years will eventually get to break to new low levels of short-term yields, or the short-term yields are going to pop like hell, and in that perspective, rapidly breaking the supports on these 2-year notes futures contracts. Okay, so I don't know which one is lying, but one of them definitely is. Okay, until then, I think more cautious approach regarding yields is absolutely necessary, because if investors are playing and gambling on 30 years, but not putting that risk into the 2-year, that makes a huge difference. Okay, so it means something isn't right in here. Definitely have to bear in mind the yield curve within the next few days. Okay, that being said, we switch right into the charts, because this is where the things are the most interesting to talk about today. All right. All right, first thing first, the NASDAQ. So this one, as long as we talk about it, is the most stupid of the indices, even though we could actually just study the top 5 stocks. It's themselves, because they're definitely making the gains. So they're the top 3 into the NASDAQ's heavy weighting. They're the top 5 into the S&P 500. So they're fucking up the entire valuations in those indices. But anyway, this is what we live in. NASDAQ is in this bubble context in which we're making a steeper and steeper trend channel. Here was our weekly trend channel. Sorry, this one. Let me just grab my arrows. Okay, so this one, then we go to a daily, then we go to a 4-hour, now we're into our H1 time frame trend channel, and the question is whether or not we're going to manage to create a steeper 15-minute trend channel later on, as we will deal with this top area. So the latest few days have been pullbacking on the trend channel, which, if you're aware of my patterns into trading bubble, is a first red flag, but not necessarily means selling. We need to get out of the trend channel, which we actually failed to do yesterday, and we even more than that created an overlapping pattern, which is very dangerously signaling the continuation pattern into those bubbles. So that means until then, I cannot speculate on how this market will behave, but to say as long as this overlapping structure stands in, risks is to the upside, which means if you want to trend follow the bubble, you probably have made the right choice yesterday if you actually bought and put a stop loss. That's once again, I think, a very dangerous thing to do, but I'm also forced to acknowledge that this is the only thing that works so far. Bears are totally getting wrong. All I can see yesterday was putting quite some risks, breakout patterns, quite some selling systems and stuff like that. So things could really have deteriorated later on yesterday, but all I see is that they don't. So until then, I just can acknowledge the fact that I disagree with the market, though I stay out, and I hope you do understand this process. If you're trying to fight against this thing, this can be very painful. So you can fight eventually if you know what the fuck you're doing on some specific prices area when conditions are risk limiting. But as you can see, this is not about risk limiting into those structure. It's all about risk taking more than anything else. It's just how much risk are you willing to take until you break the toy. And that is what we live in. Okay, people don't risk manage. People don't risk limit. People risk take until we take too much risks and we fuck it all up. That's what we're experiencing. Like I said, if you agree with that, play along this game, but don't try to fight it. Okay? So that is the problem we're living with right now. We're living in right now with the NASDAQ. As long as we're creating overlapping structure and we're looking for trend resistances, we're all looking forward to break them. So today can be a staggeringly bullish day for NASDAQ. What can we look for? 30,000? I don't know. It's just going to be stupid. We're looking for milestones and stupid trading activity, and until then, don't fight. Okay, what I'm looking at right now is this spread chart. Okay, this is the one I talked to you about the other day, but just introduce the perspective, not necessarily have actively been trading them so far, as I'm looking for entry points, which so far I just can't manage to find. I've got early activities showing taking profit patterns in here, so that could be trading the trend channels in here. So today, or within the next few days, I'm definitely looking at whatever the fuck is going to happen there, because that is a technical area. Look at the context. We're going totally stupid. Let me just zoom out this thing so you get the actual perspective of what we're actually getting to talk about. All right, so this is the area we're getting to trade. This is where I think a reverse can actually take place. And I'm looking at this area because this is a binary choice, okay? Let me just put that into perspective. So as you can see, we do have higher low points. That definitely it. That is a big range, okay? So this is a very simple choice. Either we're going to fail in here and make a lower high point. That's going to build a long-term triangle for this spread chart. Okay, contraction structures. We're talking about something that has been going on for approximately 40 fucking years. So we're really talking about long-term stuff. You see the 2000 bubble. So if you think we're into the same thing right here, right now, you definitely are right. But higher low point can also create higher high points. And in that perspective, this area, instead of being a reversal, will be an acceleration pattern. So I don't know what's down the corner. Eventually, we could be on the verge for so much more gain coming along the way with the NASDAQ. Yes, it is possible, and some people are definitely gambling over this possibility. Very dangerously, of course, because if there is a reverse, it's not going to let it pre-signals. It's just going to be immediate reverse, and in just 1 month, we'll erase most of what's been done over the latest month. But until then, that's a speculative call as well. So be smarter than the ones that think they know what the future is all about, because we don't. And as smart money managers, we're supposed to do this thing of risk managing the probability in which you can be wrong, which the others don't, and which means later on they'll end up losing the money and we'll end up picking it if we're smart enough to do our job. Okay, so I'm looking at this area. Like I said, I don't see any early signals so far. I'm looking at the daily charts. As you can see, I see taking profit patterns detected on the momentum, but absolutely no price reaction so far. So there is no emergency getting into trading this thing because the signals are not necessarily flashing red. And the last time we've had suitable selling signals in here, as you can see, the market got over M and just built a support out of these levels later on. So it's a big question mark on whatever going to happen into this area. So definitely have a look at this spread chart. It's definitely going to be an area of interest for the smart money, but that doesn't mean it's going to work out. And that is definitely this perspective I'm trying to share with you guys in this podcast in here. Just like same thing goes for the VIX. I tend to believe that the structure we have on the VIX is really leading to some very dangerous volatility down the corner. It feels like we're right in here and we're waiting for the fuck it all up situation in which something triggers an absolute volatility explosion, which will probably lead us to double down on volatility, going out of 25 to get immediately to 50. That's what I think, that's what I feel, but that's not what I trade because I've got nothing leading me to do this thing. But just like I said, waiting for something to actually happen. And I'll be definitely willing to join the market at the minute this thing ever triggers. But until then, the only thing I see is a slightly but slowly deteriorating dollar. And that is forcing people to risk take on specific dollar stamped assets. And they feel, all right, dollar's going down, nothing happens, so we get to rise prices of demanded asset in US dollar. What are those demanded assets? Everything that is overpriced right now and getting into a parabolic scheming structure, silver, gold, and stocks. That's the only thing that goes stupidly to the upside, and people are getting to bet on them as long as the dollar will remain subdued to the downside. So that's the pattern we're into right now. And like I said, I'd rather like to trade Eurodollar to the upside rather than trading stocks, and specifically those 10 stocks. Because I don't think Eurodollar will fall off a cliff and violently reverse, in which I think some of these 10 stocks can do it. So I think the risk is definitely less violent on forex market right now than they are into trading gold, trading stocks, because you better get to be right. And it can be freakingly rewarding if you are, but the day you'll be wrong can be very costly as well if you're not smart enough to acknowledge that the party's over. So smart money managers who are following the trends because they know how to do it, I have no problem with that. They definitely probably will do it right and be able to reverse when the thing will be over. But what I'm totally concerned about is the dumb money getting in and not being prepared to reverse the positions when the thing will actually happen. They will not acknowledge that the party is over. They'll just think it's going to keep on going. And this is where the actual problems will show up. All right, anyway, it's time to get to conclusion in here because we have said more than enough today. All right, so as a conclusion, same thing all over again. Looking at the market, definitely a big yes. And what I'm trying to share with you today is those areas in which what you're looking at could actually make a little bit of sense, actually. But this is not something you can trade. I suggest you really wait and look at the spread chart on US dollar, on Dow Jones versus NASDAQ. This is probably what the smart money is looking at right now. But as long as we are into a speculative technical area, we have early signals of just profit taking, which is not the most aggressive pattern that could trigger, but you definitely need to have a look at this chart on a day-to-day basis and update, okay? Have a look at the VIX. If it triggers and if stock starts to fall off a cliff, don't be dumb enough to think that this is a pullback and this is a buy the dip opportunity. If we fuck the volatility, stocks will fall off a cliff, and this is not for just a 2% pullback. We're probably starting for a 15% drop on every indices. It's not going to happen in a few days. It's going to take weeks to get there probably. I mean, no one knows how fast this could happen because no one knows what the catalyst will be to trigger this. Until then, a lot of people are gambling on the fact that nothing happens, though we can make gains, and we're going to make more and more gains because as prices rise up, risk is actually rising, and therefore the profits we make must be compensating for the risk. So I understand smart money following the trends. I also know how dangerous that is, and I know some people will be able to navigate that. I also know that a lot of people being part of it will totally not be aware of it and will totally dumb trade later on. So I think this is where the money can be made with very low risk patterns, waiting for this shit to collapse and take the money of the DOMs. That's really what I think is the most rational thing to do right now, and that's exactly what I am doing. Looking at covering my personal portfolio to don't be suffering from the potential very rapid drops on prices for the very dangerous assets. So more than anything else right now, the only thing I'm looking at covering in the portfolio is trying to cover my Tesla exposition, because this is where the heaviest losses could come up. When I say losses, I'm just saying gain decreasing. So I don't consider the actual Tesla price as being the value of Tesla. I think that's just stupid price, but I also think that the drop in price can cause some pullbacks on my actual gains, which I wouldn't like to get. So it's more about I'm eventually short selling Tesla just for the amount of the buying entries I have. So it's more about covering to avoid losing quite some very, very nice gains. But I don't think this thing is ever going to go much, much higher than that. I think we're already so far away from the actual valuations. Then this is just, I'm waiting to see how high stupid guys will be willing to pay for this. So that's the thing we're all about. We're totally away from value. It's definitely not about it. It's about how high can price rise, and we'll see all about it. It's just, yeah, like I said, it's a Ponzi scheme. How much people are willing to pay for this? Okay, so we're looking for limitations. We're looking for ground or for roof limitations, or I don't know, burning their wings over the sun. So we'll see whatever is going to terminate this pattern. Until then, don't fight. Don't be stupid to fight. That would be just going as stupid as people just following without knowing the problems down the corner. So if you're following, and be aware that you're going to have to reverse one day or another, and that you basically trend follow until the shit hits the fan, and you'll be smart enough to stop doing this when it shows up. And don't be among the guys who will say, all right, 2% pullback, man, buy the dip, as the market will probably fall off a cliff for 15% and then get totally wrecked later on. So don't be among those guys. And as long as you do this, I'm pretty fine with that. The only perspective today is just for you to avoid making bad decisions. So you can make decisions I don't necessarily agree with, and I'm totally fine with that. Like I said, my decisions are personal. I don't want, because I can't follow those structures. That's just a psychological limitation I have. It breaks my ethical boundaries, so I just can't do this. Though, if you do, I totally understand that. I think it's the smartest choice to do, actually. Just trend follow this thing and be aware that one day it will stop, and you need to be smart enough not to try to keep on the party going when it's actually over. Just go home and take the gains you could have taken in the process. That's also good. So don't remind that you need to rise the stop losses as these things go up, and the day the party's over, just acknowledge it and play along. Okay, until then, just hoping for something to show up, just hoping for volatility show ups. But until then, I'm just gonna have to look at the market and wait.